Hello everyone, this is Drew from Best of Us Investors working with Mark on the Platinum Trading platform. As you may know if you have been a subscriber on the channel for some time now, Mark, who has been successfully investing for over 40 years and warned us to get out of the market in 2021 November when the market was at its peak, is now helping our subscribers on swing trades analyzing more than 1,000 companies each week based on 10 indicators and sharing the ticker symbols of the stocks that are set up for good uptrends every day along with weekly Zoom calls for Q&As with the members. So if you might be interested in our service, please make sure you check the link in the description below. So as I mentioned on our previous video, when you are swing trading, it is very important to know how to read the macro market or the indexes such as the S&P 500, Dow Jones, and the Nasdaq, since the majority of stocks follow the trend of the market. Now last week, the market in general all went down again, but the major news was that the Dow Jones went under the 200 SMA or the 200 single moving average, which is one of the most important support levels for any stocks or indexes. And therefore, investors are now keeping a close eye on the Dow Jones to see if it would drag the other two indexes as well. So how bad was the Dow Jones, and what does it mean when you say it went below the 200 SMA? Let's hear from Mark on what he has to say about the market based on his chart analysis.
Here's the S&P 500. We just had deteriorating market conditions. We went under the 9 and just stayed. We actually crossed under 4,300, which is a psychological resistance line for 2 days, and we came back up. We bounced off it, wicked above it, and then today we went up and hit the 9, and now we're down below again the 4,300 level. We're getting a little bit better on the MACD. You can see the histogram starting to move up. You can see the stochastic starting to move a little bit. Still not much momentum. So again, from a short-term swing trading point of view, we got to watch this. So look, this is the big one here. The Dow Jones. So the Dow Jones actually a couple of days ago closed underneath the 200-day. So I waited to see what the next day did, and you can see what happened. It took off to the races, wicked down, and then got some support, came back up, but closed down. Yesterday, was an update. Still couldn't get above the 200, wicked up to it. Today we crossed over, back again, bounced on the 9. Now we're right back down to Bollinger Band. Still heading down on the MACD. A little bit of a rise in stochastic, and we're just dead, no momentum whatsoever. So the Dow's been taking it in the shorts, and to me, we're now in bearish territory in the Dow Jones, and we'll have to see, are the rest of the markets going to follow? Let's go look at the Nasdaq. So Nasdaq's faring a little better because it has the big 7 in there. So when with the treasuries coming down a little bit off their highs on the yields, you can see it kind of popped up. We got above the 9, but we're still below the 9, and we'll see where it closes. Well, we're still above the 200 on the Nasdaq and the S&P. Seeing a little bit of a turnaround on the stochastic, a little bit on the MACD, but we'll see what happens. Momentum's still pretty low, even in the Nasdaq.
Now, when swing trading, knowing when to sell a stock is as important, if not more important, than buying a stock. It would be an ideal case to sell a stock after its run up and right before it gets rejected and pulls back. This way, you can sell and preserve your gains near the top before the stock goes back down. And this is why learning how to read the charts is important. So if you can read the charts and notice where the major resistant line or level is for a stock, then you would probably have a higher possibility on knowing when to sell a stock while being safe and taking a good amount of profits. So now let's take a look at a number of stock charts analyzed by Mark to see what I mean when I say it is very helpful and probably makes you a more profitable trader if you know how to read the resistant levels.
This is the XLE, which is energy ETF. You can see we popped up for 3 days above the 9, but now we're coming down. It looks like we might close underneath. We still have a rising 9. We're still above the 200. Seeing weakness kind of in the MACD, a little bit of a rollover. You can see starting in the stochastic, and we're right at 50 on the RSI. So back here was a nice run up, but you see what we did is we hit resistance, and this green line resistance has been pretty solid for me. And then above, here's where your sells are, but your resistance has been a good line. So if you get into oil, use your charts and make sure you know where support and resistance is, because it's so volatile that if you don't watch it and set your limits tight, it can get away from you. And see, here's Exxon did the same thing. Of course, Exxon is the biggest component of the XLE, so it looks the same. We came up and it hit its resistance, and again, it's down, bouncing off support of the 9. So we'll see what happens. But you're looking at the oscillators, and they're looking like they're getting weak here, just in energy alone. So, everything has a rise, and then it takes a breath and goes back down, then it can rise. So just remember that, especially in energy. We saw it came and it popped right here above the 9 with a full candle. And the next day it did the same. So we got in and see 2 days later, it's done pretty well. It got past the 20, came up. And again, here you see resistance. These lines mean something in a majority of cases. Sometimes they blow through them just like here, but they didn't get too far. But you see it went up to the 50. So when you're seeing something like this and the next day, if you want, this is a good place to put in your sells limits right below these lines. In case it wicks up, then you're out. Okay, and it could still go up. Here we got resistance again, right over the 50. So you got two resistance areas really close together. So that's a good time to get out. You still have nice positive MACDs and stochastics here, and that's because we have this little move up today. But if you're risk adverse like me, and if I was trading in this, that's certainly with the markets the way they are and being Friday, that's where I would have probably put something to get out at that level up there.
So with that, if you're interested in these swing trade updates, daily ticker suggestions, educational content, and live Q&A with Mark on a weekly basis, make sure you join our Platinum member in the description below so that we can make it through this tough market together. I'm looking forward to seeing you all on our weekly Zoom calls so that we can share great insights together. Thank you very much, and I hope to see you on our next video.